Gold prices edge lower as strong U.S. data fuels rate uncertainty. Gold prices fell slightly in Asian trade on Thursday after signs of sticky U.S. inflation and a strong economy sparked doubts over just how much the Federal Reserve will cut interest rates. The yellow metal was already nursing some losses this week as news of an Israel-Hezbollah ceasefire sapped demand for safe havens. But overall losses in gold were limited as the dollar retreated further from recent peaks, with traders still maintaining bets on a December interest rate cut. Spot gold fell 0.2% to $2,630.52 an ounce, while gold futures expiring in February fell 0.4% to $2,653.91 by 2300 Eastern Time, 4 o'clock Greenwich Mean Time. Strong PCE, GDP data spur rate cut doubts. PCE price index data. The Fed's preferred inflation gauge rose as expected in October, moving further above the central bank's 2% annual target. The reading was accompanied by gross domestic product data showing steady growth in the third quarter, as well as slightly stronger than expected weekly jobless claims data. While the readings did little to deter expectations for a December rate cut, traders were seen growing more uncertain over the outlook for rates in 2025. Uncertainty over a Donald Trump presidency added to the mix, given that he is expected to dole out more expansionary policies and trade tariffs that will push up inflation. This trend is expected to limit the Fed's easing cycle. UBS analysts said in a recent note the central bank will slow down its rate cuts to a once-a-quarter affair in 2025, and also forecast a higher terminal rate. Higher for longer rates bode poorly for non-yielding assets such as gold. Other precious metals also fell on Thursday and were nursing steep losses in recent weeks. Platinum futures steadied at $933.40 an ounce, while silver futures fell 1% to $30.255 an ounce. Gold price bears seem non-committed amid trade war fears, December Fed rate cut bets. The U.S. Bureau of Economic Analysis, B, reported on Wednesday that the Personal Consumption Expenditures, PCE, price index rose to 2.3% on a yearly basis in October from 2.1% in the previous month. Additional details of the report revealed that the core PCE price index, which excludes volatile food and energy prices, rose 0.3% on a monthly basis and edged higher from 2.7% in September to 2.8% last month. Separately, data published by the U.S. Commerce Department showed that the world's largest economy expanded at a healthy 2.8% annual pace in the third quarter on strong consumer spending, which rose by 3.5%. Meanwhile, the Labor Department said that the number of Americans filing new applications for unemployment-related benefits fell by 2,000, to a seasonally adjusted 213,000 during the week ended November 23. This helps offset a slight disappointment from the U.S. durable goods orders, which rose 0.2% in October against an increase of 0.5% expected. Excluding transportation, orders increased by 0.1%, missing estimates. This comes on top of worries that U.S. President-elect Donald Trump's policies will boost inflation in FOMC minutes, showing that the committee could pause its easing of the policy rate if inflation remained elevated. The benchmark 10-year U.S. Treasury yields rebound from a level not seen in a month and assist the U.S. dollar in reversing a part of the overnight slide to a two-week low, exerting some pressure on the gold price. Trump earlier this week pledged to impose tariffs on a wide range of products coming into the U.S. from Mexico, Canada, and China. Apart from this, geopolitical tensions underpin the safe haven precious metal and help limit losses. Copper prices weak, more China cues awaited. Among industrial metals, copper prices moved little after logging steep losses in recent sessions, with focus turning to more economic cues from top copper importer China. Benchmark copper futures on the London Metal Exchange fell 0.1% to $9,015 a ton, while February copper futures steadied at $4.1410 a pound. The red metal was pressured by growing fears of a Sino-U.S. trade war, after U.S. President-elect Donald Trump threatened to impose more tariffs against China. Traders were also waiting to see what stimulus measures Beijing will enact to offset economic pressure from any increased U.S. tariffs. Chinese Purchasing Managers Index data for November is due on Saturday and will offer more cues on the economy.
Friends, thanks for watching. Please subscribe my channel for more videos.